Hello, everyone. This is your market update for Friday, September 19th, 2025. We're going to start with the FedWatch tool. Markets are still expecting another 25 basis point cut at the end of October, about 92% probability there, and then probably one more 25 basis cut in December. So we could see another 50 basis point cut before year end. If we go over to inflation nowcasting, we're about two-thirds the month through September, and right now they're forecasting inflation headline CPI at around 0.4%, which would push the annual run rate up to around 3%. So we'll have to see where that comes in. I still think the numbers for a probability for a rate cut are probably overinflated, and really will be focusing on the October 3rd non-farm payrolls, and in particular the unemployment rate, to see what the next move is going to be by the Fed. But I don't know that those rate cuts are guaranteed. Over to the dollar, currently trading at 97.78. Looks like prices bottomed here on Fed Day. On the announcement, we tested the July low, reversed, formed a swing low, and now we're getting some upside follow through. We have a confluence of resistance here at the 50-day EMA, as well as this 2020-25 trend line here around 98. If we get some upside follow through above the 98 level, then I'd say this could be a near-term breakout, which could propel the dollar back towards the 100 plus level, which would more than likely trigger a correction in precious metals. Over to gold, currently trading at $3,680. Prices are trying to hold the 10-day EMA. We formed a swing high. We're going to see what happens next. If we get a breakdown below the 10-day EMA, then we're probably headed into an interim cycle low, probably into month end before we get the next rally. Over to silver, currently trading at $42.20. Pretty much the same thing here. We formed a swing high, and now we're trying to hold the 10-day EMA. If prices hold the 10-day, then I think we could be headed towards 45. If we get progressive closes below that level, then we're probably looking at an interim cycle pullback that you don't see the gap on here, but there's one around $39.70 that we could come back to fill that gap before we attempt the next rally. Over to the 2-year Treasury yield, this is one of the reasons why the Fed probably has a little room to cut rates. Currently, Fed funds are between 4 and 4.25%. They just dropped that yesterday, and the 2-year yield is at 3.58%. So typically, the Fed follows the 2-year yield, so they have a little room to cut more to catch up to the 2-year. So that's why we could see a little more downside in the Fed funds rate into year end, but we'll keep an eye on this. If the 2-year yield begins to rise over inflation concerns, then the odds of a Fed cut in October, I think, would probably diminish. Over to GDX, finished up yesterday, 0.19%. We're trying to hold on to the 10-day EMA here. We'll see if we do. I liked yesterday's price action, but really, we're up significantly here since late July. I think it was almost 40%. So we're probably due for a pause or a pullback. We have a price gap here at around 63, which also corresponds with this trend line, which I think will act now as support. So if we do see a pullback into month end, I would expect to see prices find support around 63 before we attempt another rally. And then lastly, Bitcoin currently trading at $116,292. We got a follow through above the 50-day EMA, and usually that supports that final rally into a 4-year cycle peak. We'll see if this holds. If prices were to roll over, say the dollar were to strengthen, and we get progressive closes back below the 50, then we could see a final pullback into a late September low before we get that rally. But overall, I think we're probably going to see one more rally to new all-time highs in the fourth quarter before this peaks, and then we'll probably enter a 12-month bear market. So that's it for now. Have yourself a wonderful weekend, and we'll talk to you later.